and in today's video, I do want to give you guys an indication or an update on the NASDAQ as well as the Dow Jones and the dollar index. Now, we did have the core retail sales and retail sales, which is two very important key indicators investors use to make decisions when trading the market. So I'll give you guys an update on how you can use this information to make better trading decisions this week there as well. If you are new to the channel, a sub would be appreciated as I provide valuable educational content on a daily basis. And if you enjoy the video, a thumbs up would be appreciated there as well. Before we get started, I just want to say a very special thank you to our members, which is Lungile, Mpati, Siabonga, as well as Ilya Petrus there as well. Thank you so much for the support to the channel, you guys, and also thank you very much for everyone. We also have a question here by the one member over here. Let's see. The question here is, what are your thoughts on these Wyckoff concepts, accumulation, distribution, institutional candles, imbalances? Do they feature in your analysis at all? No, they don't. And I also don't teach those methods of trading there as well. Okay, so let's jump straight into it, my good friends. So the first thing we are going to look at is the retail sales. Now, for those of you that don't know what the difference between the retail sales and core retail sales are, retail sales affect the monthly estimate of all consumer spending, while core retail sales refer to all consumer spending, but this excludes vehicles, petrol or gasoline, building materials, and food services. Now, the one thing that you need to keep in mind is the stock market was quite bearish on this data, and I'll explain to you exactly why that is. Now, you know, the NASDAQ took a dip there, the Dow Jones, but before we get to that data there as well, let's just go back to and add, because we first you can see core retail sales were positive, came through at 0.4, which is higher than investors anticipated at the negative 0.1, but the retail sales came through at a negative. And the main reason for this basically was, if you remember, that there was a drop in the inflation numbers, and as a result of that, retail sales came down as well. Now, because the retail sales is a tool that is used also to measure consumer spendings, and the CPI data gives us this information. So when the CPI came through with that lower data, it was very easy to expect that the retail sales will be lower as well. Article from CNB says Dow Jones falls 300 points as rally fizzles Fed minutes ahead there as well. Stocks fell on Wednesday as the rally on Wall Street that has propelled equity prices higher since mid-June appeared to lose steam amid fresh batch of retail earnings, which is exactly what I said now. Basically, because of retail earnings that were lower, and the reason why the stock market is negatively impacted when retail sales are lower, it's because it's used as a leading macroeconomic indicator. Healthy retail sales figures typically elicit positive movements in equity markets, which means higher sales are good news for shareholders of retail companies because it means higher earnings. Unfortunately, if retail sales come through lower, it's got a negative effect on the stock market because it means that consumers are not spending, and that's why that's basically how this whole thing works. In any case, the Dow Jones fell 306 points also because Walmart came out then said that they are also looking at reducing some sales there as well. And while the S&P and the NASDAQ was down 1.14% and 1.73% respectively. Traders continue to comb through corporate earnings from retail sector that kicked off with Walmart and Depot on Tuesday. Target shares were also down there as well. So there's a bit of a mix and match as we can see over here, but with the retail sales now, we can expect a further decline on the stock market, most potentially a deeper correction on the Dow Jones and a deeper pullback on the NASDAQ if you look at the weekly time frame, because there is a lot of liquidity to the downside. And also this is a 61.8 pullback, testing previous level of support as resistance. So I'm not going to redo the breakdown because I've just done it not too long ago, but I'll go off on the weekly over here. We have this massive impulse. We have the structural level over here as well. And this is where we can expect the NASDAQ to pull back to now that we have the retail data before that continuation to the upside. Now, the way that we're going to approach this from a daily perspective, the Nasdaq is testing again bullish. We're still in bullish territory, and we don't want to make that same mistake that some people made, thinking that the Nasdaq by selling the Nasdaq in bullish territory. So what we do going to wait for, what we have to wait for basically is because we are testing a current level of resistance that is now acting as support. We need to wait for this level of support to get broken, and then on the retest we can then start looking for that selling opportunities. If I do remember, that level that we are looking to target is probably sitting around this level here as well. And as traders, we have to be reactive, not predictive. We need to learn to adapt to the ever-changing market environment. Now, putting that in simple terms, now the market is very unpredictable. You can never predict the market, even if you wanted to. That is too deep. We're just gonna go there. You can never predict the market, even if you wanted to, because why? 1 minute you go sleep, this is it. Retail sales came through negative. Tomorrow you wake up and then China has decided to not going to lockdown, meaning that because China has such a high supply to the world, if China says, our economy is busy recovering, they recently slapped interest rates, the Nasdaq will continue higher. But based off the current data that we have available to us now, we can expect the Nasdaq to continue lower. Alternatively, if by the grace of the power we do get a break above that level, then by all means we can start looking for that opportunities to the upside there as well. Dow Jones very much dependent on company earnings, also not going to make it all the way to the top. We have this overextended W formation that we can expect the Dow Jones to pull back through now after omitting the negative retail sales data there as well. The Dow Jones also need to close tonight below the strong level of resistance that the market is currently testing now. If we do get a closer below this level, we will use that as our entry point to look for long-term selling opportunities to the downside there as well. Now, all things now leads to the dollar index. So the dollar index has got the opportunity to now finally go and complete this W formation that we were hoping to see over there, potentially see a pullback and that continuation to the upside there as well. Now, as traders, we have to get clear confirmation. Why? Because the market is currently trading at this strong level of resistance. If we can get a clear daily close above that level, then by all means we can expect the market to continue slightly higher. Then on the pullback we will get that correction there as well. Having this massive impulse and that correction to that level will give us a perfect 0.382 pullback, as we expect the market to continue higher very aggressively, and a 0.382 pullback normally means that the bullish momentum is quite strong. I thank you for your time. That's all from my side. And as always, cheers for years.